Welcome, students. A very good evening to all of you. Yes, good evening to Hitesh, Sudhanshu, Janvi, Prema, Pooja, all of you who have logged in. So, guys, we are in middle of chapter 3, that is audit documentation and audit evidence. So, day before yesterday, students, we were doing essay 501. Which was relating to audit evidence concerning some selected items. So we had already done what are the auditor's responsibilities regarding existence and condition of inventories as per SA 501. And we had also learned that how it is important for an auditor to attend physical counting of the physical counting process of the inventories. And we had also discussed that he has to attend the physical counting of inventories unless it was not practicable. So there are two more parts of this essay. One is pertaining to litigation and claims involving the entity or the company, and third is auditor's responsibilities regarding segment information. So first we shall be doing the part relating to litigation and claims involving the entity. Students, there can be situations where there are pending court cases going against a company, or the company itself has filed some court cases, or the matter is in litigation due to various reasons. There might be disputes with the vendors, or there might be contractual disputes, or there may be some sort of legal disputes. Then students, you would appreciate how the auditor would come to know about whether there are some litigation cases pending against the company, or the company has filed some cases. So essay 501, this part which we are going to study, deals with litigation and claims involving the entity and auditor's responsibilities in this regard. So SA 501 states in this regard that it is a duty of the auditor to make an inquiry with the management. He would ask the management, he would seek information from the management whether there is some litigation going on, what is the status of those cases, and he may quiz the internal legal counsel of the company in this regard. He would try to seek information from him. So he would inquire these sort of things from the management, and also from the in-house legal counsel of the company, if any. Students, you have to remember that auditor has no magic wand with him. We had already learned that he seeks information. So here in this case, he would be applying inquiry as an audit procedure to seek the information, to seek the required information from the management or from the in-house legal counsel of the company. Similarly, students, he can also review the correspondence between the company and the say external lawyer, external legal counsel, and he can review what is the status of the pending cases of cases which are in litigation at various stages. Similarly, one more weapon in his hands is reviewing legal expenses account. So it is very simple. He can review the legal expenses account. If some payments have been made to the lawyer, then obviously he would inquire why the payment has been made to the lawyer. He would seek information from the management to which case this payment pertains. So by inquiring these sort of things and by reviewing legal expenses account, he would come to know about many things which would provide him the information whether there is some litigation or there are some claims involving the company. So is that clear to you, students? Is that clear to you? Hiral, we shall be coming to segment information just after a while. So keep a little bit of patience. So this broad general idea of auditors' responsibilities regarding litigation and claims involving the entity is clear to you, students. So we will now look at what is written in your module in this respect. Yes. So students, we are at page 3.48 of your module. So litigation and claims. So it states that the auditor shall design and perform audit procedures to identify litigation and claims involving the entity. So now why students this identification is important? Why this identification is important that auditor should know about the status of legal cases? Because this carries the risk of material misstatements. Why it is so? So guys, there might be some cases where liabilities might fall upon the company, or these are likely to crystallize in near future. So the auditor would see whether these have been properly disclosed or not. So that is why it becomes important for an auditor to identify litigation and claims involving the company. Okay, guys, clear? So how he can do that? What are the audit procedures by which he can do that? So one thing is inquiry. Obviously, inquiry. He would be inquiring the management, as we have recently discussed, including in-house legal counsel. In-house means a lawyer who is employed within the company. He is an employee of the company. Say there might be a legal department in the company. So, and it might be headed by a competent lawyer. So the auditor would definitely be seeking information from that person. And another thing is reviewing the correspondence with the external lawyer. Say the company is availing services from a reputed lawyer regarding some cases. So the auditor is going to review what the correspondence is between the company and the lawyer. So he would come to know at which stage the case is, whether it is at some preliminary stage or whether it is near completion, and how the arguments are going, whether some liabilities are going to be crystallized or not, or what are the rights and liabilities involved, and reviewing the legal expense accounts. This I have already explained, that by going through the legal expenses accounts, the auditor comes to know the details of persons to whom payment has been made on account of legal fees. So then the management is not in a position to hide the information. Obviously, when the auditor would ask, they would have to tell that we have made payment to this lawyer on account of this. Nobody would, obviously, nobody is going to render some services free. Okay. So now comes next, it is written that if the auditor assesses risk of material misstatement regarding litigation or claims that have been identified, or when audit procedures performed indicate that material litigation or claims may exist, that auditor shall, in addition to procedures performed by SA, seek direct communication with entities external legal counsel. Say if the auditor thinks that, if the auditor observes that there is a potential risk of material misstatement in litigation or claims involving the company, then he may correspond directly. That is very important, guys. He may correspond directly with the external counsel. With the external counsel. So how he would correspond? He would write a letter. He would write a letter to the lawyer, to the concerned lawyer, letter of inquiry, and he would pinpoint, he would specify what does he want to know from the lawyer. Okay. And another important thing is that, say the lawyer is prohibited by its own rules or regulation or code not to disclose the information pertaining to the company. Okay, then the auditor has to perform some alternative procedures, because situation is such that that the lawyer cannot disclose information relating to his client with the auditor of the company. He might be bound by some regulations, or it might not be permissible under law. So, or under the code of ethics of that profession. So, in that case, the auditor shall perform alternative audit procedures. Some other procedures which give him a sort of confidence, which raise his level of satisfaction. If he can correspond directly with the external lawyer, then it is okay. He can get to know first-hand information of what is going on, because that external lawyer is dealing directly with the cases. So he would be having first-hand information available with him. However, if this procedure is not possible to perform, then he shall perform alternative audit procedures. Now, Sudhanshu is asking, who is external legal counsel? And Nikita Gupta is asking, what is the difference between litigation and claims involving the entity? Students, my request to you is, please kindly apply your own mind also, and do not ask too frivolous questions. So what is, Sudhanshu, you are asking, what is entity's external legal counsel? The line itself suggests you that it is an external legal counsel. It means that a person who is external to the company, who is not employed in the company, and legal counsel means lawyer. Lawyer, he is a lawyer. He is a lawyer by profession who is external to the organization. And internal legal counsel means a lawyer who is on the payrolls of the company. Who is on the payrolls of the company? He heads legal department. He is an employee of the company. So a company, there might be case where there is a legal department in the company. However, but for appearing in courts, or for obtaining some technical guidance relating to legal matters, the company may be availing services of a lawyer or a firm of lawyers. So is that clear to you? Sudhanshu and Nikita, you are asking what is difference between litigation and claims. So, Nikita, these terms are being used collectively, litigation and claims involving the entity. It means litigation means that there is some dispute at and the company has gone in court or with some authority. The matter is pending before some authority. It is in dispute, or somebody else has filed some suit or case against a company. So claims, litigation and claims involving the entity means that litigation might would definitely give rise to some claims. Now claims might be in the form of rights which the company may want to enjoy, or it might be in sort of certain liabilities which might devolve upon the company. Okay. So another important thing, students, now this is also important. Why it is important for an auditor to meet with external lawyer? In what circumstances, it would be appropriate for him to meet with the external counsel? Say, normally the auditor might correspond with the external lawyer or external counsel by letter. However, in some exceptional circumstances, in some certain circumstances, he might feel it necessary to meet in person with the external legal counsel. Why? Why it is so? It may be due to because the concerned matter is very complex. It involves many aspects, and it is multidimensional in nature. Okay. It touches upon various laws, various acts. Like there might be a civil liability, there might be issue of criminal liability, there might be aspect under taxation laws, direct tax laws, and indirect tax laws. Okay. Or the auditor determines that matter is a significant risk. The auditor determines that matter is a significant risk. There is a significant risk of material misstatement in this matter. So the auditor wants himself to be clarified about all the information which he seeks first hand from the external counsel by having a one-to-one meeting with him. Okay. And there might be a situation where there is a difference of opinion between the management and the external lawyer. So it might so happen that management is of certain opinion in respect of certain matter. Say some case is going on against a company, and the management is of the opinion that we shall win the case, that there are no liabilities going to devolve upon the company. However, going by how arguments are proceeding in the court against a company, or what are the precedents in this regard, or what is the jurisprudence in this regard. So the lawyer might not agree. He might say that in his opinion there is a high probability that some sort of liability may devolve upon the company. Okay. So these can be the situations where it would be important for the auditor to meet the external legal counsel. Okay. Obviously, guys, another question arises here, that arranging a meeting with the external legal counsel is only possible if management wants it. Say if the management doesn't give permission, then how he can meet? He is not going to disclose the information to you because you happen to be the auditor of the company. So it is only when management also says, management also cooperates, and management considers that it is in their interest that all the information which is required by financial reporting frameworks is appropriately disclosed. So in that case, they may request the lawyer to meet with the auditor. However, in some cases, the management might not be so forthcoming and they may refuse to cooperate. Okay. So what would happen in such cases? Now we'll see what would happen in such cases. Further, if management refuses to give the auditor permission to communicate or meet with organization external counsel, or external counsel refuses to respond appropriately to the letter of inquiry or is prohibited from responding, then and the auditor is unable to obtain sufficient appropriate audit evidence by alternative procedures, then auditor shall modify the opinion in accordance with SA 705. So that is very important. So what is the crux of this matter? What is the basic thing which you have learned from this discussion? Now students, we have understood that the auditor seeks information from external lawyer either by letter of inquiry, okay, by communicating with him through a formal letter, or say by meeting with him. And if the external lawyer, external legal counsel does not respond to letter, or he is not interested in meeting, say in these type of cases, the auditor has to perform alternative audit procedures to obtain sufficient appropriate audit evidence. However, if the auditor is not able to obtain sufficient appropriate audit evidence, even by employing alternative audit procedures, then what option he is left with, students? Then what option he is left with? He is left with only one option, that he would modify his opinion, that he would assess how withholding of this information is affecting finally his opinion in the report. Okay, you understand? So finally, he would see what is its effect on his reporting, and accordingly he may modify his opinion in the audit report. Okay. Yes, now Ayush Agarwal, you are saying, is this as per SA 501? Yes, Ayush, this is as per SA 501. I have already told you SA 501 tells us about three things. It is, the name of SA is audit evidence in respect of selected items. So it tells us about three things. These three things are: number one, auditor's responsibilities regarding existence and condition of inventories. This we have already done day before yesterday. Second thing is auditor's responsibilities regarding litigations and claims involving the entity. Okay. And the third thing is auditor's responsibility regarding segment information, regarding segment reporting. So Hitesh is asking, if auditor is not satisfied with the information given by lawyer, obviously if he is not satisfied, then he has to perform alternative audit procedures. Guys, you have to see that the buck stops at the end of auditor. He has to obtain sufficient appropriate audit evidence. Now, what is the sufficient appropriate audit evidence? It is left to his professional judgment. Okay, so he has to see whether the evidence he has obtained is sufficient and appropriate. If he is of the opinion that evidence obtained is sufficient and appropriate, then it's fine enough, he would report accordingly. But if he feels that some information is being withheld, or the lawyer is not giving the information, or is making excuses, or not making proper information, and other audit procedures which he has performed are not also able to provide him sufficient appropriate audit evidence, then in that case he would be left with no option other than to modify his opinion. He would evaluate that this much evidence he has collected, but this is not sufficient appropriate audit evidence, and there is a risk of material misstatement there, then he would have to modify his opinion. Now, Dhanlakshmi, you are asking, wouldn't modifying opinion of auditor would give false opinion as there is no sufficient audit evidence? No, Dhanlakshmi, you have to understand it that way, that lack of audit evidence is also leads to modification of opinion. Say if the auditor does not have sufficient appropriate audit evidence, then he would assess that what is the risk of material misstatement. Then in light of that risk of material misstatement, he would modify his opinion. He would state that he has not been able to obtain this much information, and there could be a possible effect of these things on the state of affairs of the company. So lack of evidence could also lead to the modification of opinion. Is that clear to you, Dhanlakshmi? Now, written representations. The auditor, guys, and one more audit evidence that he has to obtain is by means of written representations. So the auditor would obtain a written representation from the management that all actual litigation and all actual and possible claims litigation have been considered while preparing financial statements, and these have been properly disclosed and accounted for in the financial statements. So although by no means it is a sufficient appropriate audit evidence, but it is still an audit evidence. It is a confirmatory letter from the management that they are saying, look, we have disclosed to you all the litigations and claims which might be which with which we might be involved. So in this way, the auditor obtains a written representation from the management, and it gives him a sort of protection. Okay, it gives him a sort of protection that he has obtained some sort of evidence, even though that evidence may not be sufficient appropriate audit evidence. Clear, students? Now we come to segment information. Now third part is segment information. Now it is this the discussion regarding segment information is not detailed as per your syllabus. So you can understand that an entity may be dealing in different kind of verticals, different kind of lines of activity. Say a company might be into textile manufacturing, that is a different segment. It might be involved in, say, another activity of manufacturing of some other products. Okay, so if there are different segments, different verticals within the company, then the audit, it is the duty of the auditor to see that he has obtained sufficient appropriate audit evidence regarding presentation and disclosure of segment information. Regarding presentation and disclosure of segment information. Students, you would understand that segment information, that applicable financial reporting framework FRF may require itself. Under law, it may be required that segment information is to be separately disclosed. So what is the auditor's duty in this regard? His duty in this regard is to see whether whatever information is required by applicable financial reporting framework in relation to segment information, it has been appropriately disclosed or not. Okay, and he has also to see he has also to perform analytical procedures or other audit procedures in the circumstances, and he has to also evaluate whether what are the methods used by management in determining segment information. Say, students, you just understand it from that way that there might be many profit centers in a company. Like a company is dealing in 5-7 different lines of activity. So all of these are different segments. All of these are different profit centers. So these segments are dealing within themselves. So there might be certain costs, say for example, which have been incurred for the company as a whole. Then how these costs have been apportioned, how these costs have been allocated between different segments. So what is the method, whether it is in accordance with the with what is required. Okay, and if one vertical is making some transfer, one vertical is making some sale to another vertical, then how these are being accounted for. So the auditor's responsibility in this regard is limited to seeing that where segment information is required by applicable financial reporting framework, it is done, and he has to see that what are the methods of used by the management of determining segment information, whether these methods are appropriate. He has to perform analytical procedures and other audit procedures which are required in these circumstances. Okay, so students, with this we have we are done with essay 501. So again, I am repeating it. 501 consists of 3 things. Number 1 was auditor's responsibilities regarding existence and condition of inventories. Number 2 was litigation and claims involving with the entity. And number 3 was segment information. Okay guys, so essay 501 is complete. Now we shall be doing another important essay, students, that is very important. Essay 550, that is related party transaction. Essay 550. Now Hiral, is you are asking some question about refusal of management. Can auditor communicate this matter in accordance with SA 260 regarding litigation and claims? Yes, if the auditor may communicate with those charged with governance, why not? He may bring it to the light. Okay. Now we will be doing SA 550, students. Yes, we are at, students, page number 3.59 of your module. 3.59 of your module. SA 550, related parties. Now, students, first we shall be understanding what do we mean by related parties. Okay, you might have got a fair idea of related parties. You might have read it in your company law classes. I think you know about related parties. What is the definition of related parties as per Companies Act 2013? So, students, the definition of related parties here as per SA 550 is a quite broad one. Whereas in case of a company, related party is defined in section 2 of Companies Act 2013 as per the definition given in the Companies Act 2013. So here we are discussing about related parties generally in relation to any organization, in relation to any entity, not only in relation to company, but whatever definitions you have studied in relation to companies, you can fairly well understand what do you broadly mean by related parties. Say a relative of director is also a related party. A relative of a key managerial person is also a related party. Okay, so a company in which director of that company is director, that is also a related party. So these kind of things. Yes, you are writing correctly, Akash Neel. A person with significant interest is a related party. Yes, broadly it is correct. And Hitesh, you are writing related parties are those who have interest in transactions. Yes, broadly it is correct. Broadly it is correct. So you understand the spirit, the meaning behind the general meaning behind the term related party. So students, now SA 550 deals with the auditor's responsibilities regarding what? Regarding related party relationships and transactions when performing an audit of financial statements. So the auditor is performing his audit. Now he is concerned with the responsibilities regarding the related party relationships and transactions. If there are some related party transactions, then what is the responsibility of auditor in this regard? Guys, this is a very important topic. It is a very important topic. So what is the meaning of related party as per SA 550? As per SA 550, what is the meaning of related party? So it states 3-4 conditions. What are these? A party that is either a related party as defined in the applicable financial reporting framework. Say In the case of a company, obviously the financial statements are prepared keeping in view provisions of which act? Keeping in view provisions of Companies Act 2013. So obviously all the related parties which fall within the definition of related party, within the meaning of related party as defined under Companies Act 2013 in section 2, then appropriate disclosures would be definitely made by the company in the financial statements, because under the law it is required to do so. And the financial reporting framework required by law has warranted these disclosures regarding regarding related party transactions. Say in Schedule 3 of Companies Act, students, there is a requirement to disclose loans and advances, loans and borrowings separately from related parties. So if the company has borrowed money from a related party, then it has to be separately disclosed. Okay, so if the related party is defined in the applicable financial reporting framework, then it is a related party. Whatever the definition is there in the FRF, it is applicable to that organization, to that entity. So clear? Now Nagalakshmi, you are saying please my answer question below, but your question is not there. You are saying if those charged with governance are also not responding, then only he can modify the opinion. Yes, see, Nagalakshmi, you have to understand that if management is not responding to something, if management is not giving the information to the auditor, and by means of alternative audit procedures, the auditor is not satisfied, he is not able to obtain sufficient appropriate audit evidence, then he would definitely modify his opinion. He would state that he has not been able to seek this information, and in his opinion, this could be the possible effect of that withholding of information. Okay. So where applicable, FRF provides no definition of related party requirements or establishing or gives some minimal definition which is not comprehensive enough, then related party means three things. One is it may be a person or some other entity who has significant influence or control over the reporting company, either directly or indirectly. It can be directly or it may be layered also. Well, it may be layered means it may be through many companies. परतों के नीचे परतें, one layer beneath the another layer and beneath the another layer. So it might be exercising control in a indirect way. Okay. Or the reporting entity itself, the concerned company, it is exercising control with another company significantly. And third is that in case of both the companies, these are under the common control. Say the ownership of both are same, there are same shareholders, or there are owners who are close family members, or there is common key management, directors of both the companies are same. Okay. Yes, definitely, Pooja. Auditor, good auditor needs to be master in accountancy and taxation. Definitely. That is why these subjects are being taught to you. That is why you are being taught accountancy and taxation. Because ultimately, as I have already told you, that your core area would be auditing. So this is the profession of auditing. Auditing is a profession. So a person who practices auditing, he needs to have a sound knowledge of accountancy and taxation laws. This we have also read in chapter 1. Now you try to correlate this relationship of auditing with other disciplines. So we had learned relationship of auditing with accounts and relationship with law. So, so there is no need to remember such things. I had told you at the very beginning, as we move from one chapter to another, as we hop from one chapter to another, you would be getting more clarity. You would be getting more clarity. Okay, Pooja, is it clear? However, entities that are under common control by a state are not considered related unless they engage in significant transactions. Say there are certain public sector companies engaged in manufacturing of, engaged in production of, say, gas, or engaged in production of power. So these may be owned by the central government. So SA 550 states that these are not normally related parties. Although the central government is common owner, but because these are government owned and there are proper procedures, proper systems in place, so these are not considered as related parties unless in some exceptional circumstances there are huge transactions between the two. The volume of transactions is very large. Okay, so this is the broad definition of related parties. So guys, you understand what do we mean by related parties? So I will once again explain to you on the board. So what is related party as per SA 550? One, it can be a case that related party is itself defined in financial reporting framework. As say example in case of a company. Under Companies Act, related parties are defined. So what are the related parties? These would be disclosed in financial statements by virtue of law. By virtue of law. Because the company would be compulsorily required, it would be mandatorily required to disclose transactions with related parties. Okay, this is the one case. However, if the say there could be case that FRF does not define related parties, or there is some minimal definition, there is some sketchy definition, then what would happen in such case? Then it gives three sort of options. What are these? Say the reporting company exercises control or influence on another company, on another person or entity, whatever it is, either directly or indirectly. Okay, or other company, it might exercise influence or control, significant influence or control. So significant or control means that it is in a position to influence the decisions of that company, that it is in such a commanding position that it can change the decisions of another company. Okay. And uh, third is when the entity is under common control. When the two or more entities are under common control. So what does common control mean? It means that there is common ownership, common shareholders, common partners, okay, common ownership, and another is common key managerial persons. Key management is same, directors are same, and another is relatives, close family members, owner who are close family members. आपस में ही क्लोज फैमिली मेंबर सारे दोनों कंपनी में ऑनर्स हैं, लाइक देयर इज ए सन, डॉटर, हस्बैंड, वाइफ, ओके, these close family members are there in the company. Okay, so clear guys, what do we broadly mean by related parties as per SA 550? Is it clear, students? And one more thing which we had learned, that in case the entities are owned by state means government, okay, then even if the government owns 3-4 companies, then these are not considered as related parties unless there is some significant transaction or resources are shared on a significant level. Now, Naga Lakshmi, you are asking common control by state applicable only to a public company. No. Naga Lakshmi, you have to understand that public company and public sector company, these are two different things. Public sector, we are talking about, I had used the term public sector. It means where the stake of government is 51% or more. Okay, the government has got majority stake. However, public company might be, the state might not have to do anything with it. All the companies which are listed on stock exchange are public companies. Okay. So you have to differentiate between the companies which are owned by the government, where the government is the majority shareholder. Okay. Is it clear to you, Nagalakshmi? Now we come to second point. So guys, you have also to understand that the company may enter transaction, a company may enter transaction with related parties in normal course of business. It is not that all the transactions done with related parties are fraudulent or they carry risk of material misstatement. They might be normal course of business. Say if there is a company in which say a person is a director and he is also selling goods to a company in which his brother is a director, so that the transaction might be both may be doing transactions at according to normal market rates. Okay, so it might be a normal business transactions. They might not carry any risk of material misstatement. However, but they can carry risk of material misstatement. Why now? Why do they Why they can carry risk of material misstatement? These are the three reasons. These are the examples. That related party transactions may not be conducted under normal market terms and conditions. Say these might be just book entries, or these might be not as per market rates. Okay, so these might not be at the market rates. So obviously the test for the auditor would be to check that if similar goods, say in case of a sale transaction, he finds a sales transaction with related party. Now, if he finds that a transaction has been made with the related party at a certain price, then he will also verify that whether similar product has been sold to unrelated party at the same price. If it is sold to the unrelated party at the same price, then it is okay. It means that transaction with related party has been done at market rates. Understood, guys? However, there might be the cases where the transaction is not done at the market rates. Okay, say if I am selling to unrelated person something at the rate of 500 rupees per kg, and to the related party I am selling the same thing at 1000 rupees per kg, for which I might not have any logical answer. That same product, same quality, you are selling to X company, which is not your related, at 500 rupees per kg, and to Y company, which is a related party, you are selling 1000 rupees per kg. So what is the risk of material misstatement here? That sales revenue might be overstated. That revenue has been overstated by artificially increasing the sale price. Is that clear? Clear to you guys? So there can also be the situation that related parties, we had discussed that related parties may exercise control they may exercise control indirectly. So there might be many layers of companies in which they are hidden. Okay, so it might lead to complexity of transactions. Okay, and the accounting information systems are not able to identify all the related parties. Okay, so these are the situations which give higher risk of material misstatements than transactions with the related parties. These are the circumstances. These are the circumstances which are examples of the situations where the potential risk of material statements with related parties is higher than transactions related with unrelated parties. Okay, is that clear, guys? Now we have discussed. Now what are the responsibilities of the auditor in this regard? Now this is the main thing. What are the responsibilities of auditor regarding what? Regarding related party transaction and relationship. Related party transactions and relationships. Because SA 550 is mainly concerned about these things, about what the auditor has to do. Say the company has disclosed related party transactions in the financial statements. Now, what is the responsibility of auditor in this regard? Now, this is a million-dollar question. Okay. So, Srinivasan, you are asking what is the use of notifying 51% as related parties, as no directors are interested. So, 51% limit, Srinivasan, you would understand that when a company holds a majority of shares, majority means more than 50% because voting takes place by majority. So the all decisions of the company are also taken by this principle of majority. So if the state government or central government is having 51% or more shares, then it means it has got the controlling stake. It can control the decisions, it can influence the decisions in the way it wants. So that is why you would be reading in newspaper and you would be seeing in TV debates or in debates of parliament that government has reduced its stake from say 76% to 51%. So what the government has done? The government has offloaded some of its shares to the general public, but still remains control. It still remains in the driving seat, so it can still make the decision in its own favor, in its the way it wants. Okay. However, if the controlling stake goes below 51%, then the government will not be having a majority stake. Somebody other or some other group of persons, some other group of shareholders who would be having 51%, more than 51% of stake, they would be having say in deciding the crucial questions. Okay, Srinivasan, is that clear? So responsibilities of auditor. Now there are specific accounting and disclosure requirements for related party relationships and transactions. This we have already done. Like in case of a company, related party transactions have to be disclosed as per the requirement of Companies Act, as per requirement of Schedule 3, which is applicable FRF. So the auditor has a responsibility to perform audit procedure to identify and assess risk of material misstatement arising from entities' failure to account for related party relationship, transaction or balances. It means that auditor would be checked, say in the case of a company, whether all the related party disclosures have been made. So whatever the Companies Act 2013, whatever is the definition of related parties in Companies Act 2013, as per that definition, whether all the related party transactions, relationships and balances have been disclosed or not. If it is not disclosed, then obviously it carries a risk of material misstatement. It carries a risk of material misstatement. And ultimately, what the auditor is concerned about, guys, the auditor would be concerned about this thing, that he has obtained an understanding of the company's related party transactions, and he would see that whether what is the cumulative effect of all these related party transactions on the financial statement of the company, whether due to the effect of related party transactions, say revenue has artificially increased, or the profits have artificially increased, or the related party transactions are at market price, have been done at the arm's length price in accordance with the market rate. Okay, no favor has been taken, or no favor has been granted. So the auditor shall also see that whether there exists any fraud risk factor, because again guys, you have to understand that related party transactions are not always fraudulent. You have not to make a picture in your mind that if related parties are there, it is a fraudulent transaction. Only things you have to consider is that when there are related party relationships, these carry a risk of fraud. Like I have given you an example of sales with a related party company. That there these by employing audit procedures, that these transactions are genuine, these have been appropriately disclosed, and these are not fraudulent. Okay, clear students? And you have also to understand that why it is that a related party transaction, I am for short writing RP, why RPs carry greater risk, and why the effect of limitations of an audit is greater for related party transactions. Say we know students that that an audit suffers from inherent limitations. You know that an audit suffers from inherent limitations. It is not a 100% guarantee that financial statements are free from material misstatements, whether due to errors or frauds. The auditor obtains only reasonable assurance, which although is a high level of assurance, but it is a reasonable assurance, and he has carried out audit in accordance with audit procedures as laid down by essays. But this limitation which is there in all audits, whether related parties are present or not, it is greater. The inherent limitation become magnified in case of related party transactions and relationships. Now, why it is so? Why it is so? Because related party transactions provide opportunity for collusion, concealment, or manipulation. This is one important thing. And the management may be unaware of existence of all related party relationships. Now, what is the meaning of these two? It means that, as we have already discussed, that although related party transactions may be done at the market rates, these might be genuine entries, these might be genuine transactions, but there is a possibility also, there is a probability also that these might not be genuine, okay, or these might not be, these transactions might not have been done at market rates. So the limitation of audit itself to detect material misstatements is greater in case of related party relationships than in a case where there are no related party relationships. So it is only a question of degree, that chances that material misstatements are there are more when there are related party relationship and transactions. So this much you have to understand and keep in mind always. And second point is that management may be unaware of existence of all related party relationships. You would wonder how it can be that management doesn't know about the related party relationships. No, it is not that management doesn't know. It means that say in accordance with applicable FRF, it defines that these are the set of related party categories, but the management is not aware of those related party relationships, of those categories which are prescribed in law. Okay, as per law, it should be disclosed as a related party, but management considers it as a normal business transaction with unrelated parties. So it might now not have disclosed it. Okay, so therefore, there is a greater risk of material misstatement. Okay. Now, Nagalakshmi, you are asking if there is no material misstatement. If the auditor, if the company has disclosed all the related parties transactions and the relationships in accordance with the applicable financial reporting framework, and the auditor has found nothing wrong with it, then it is okay. Then he need not modify his opinion. He has not to make a separate report in this respect, unless on some aspect it is required by law. So if he has not found any wrongdoing or any misstatement, then he would not modify his opinion. Okay, so students, you have to understand that these requirements, the logic behind all these requirements is to make the process of preparation of financial statements transparent, crystal clear, and so that users can know about all the complex web of transactions. Okay. Now, Hiral, you are asking, please explain point A and B in para second. What are the point? I think you are asking about related party definition. If it is the same you are asking, I would come it to again after completing the next para. Now, planning and performing the audit with professional skepticism as required by SA is therefore particularly important in this context, given the undisclosed related party transactions and relationships. Okay, because some related party transactions and relationships, these might be hidden, and the management generally thinks that these are not related parties, but in fact these are related parties as per FRF. So if the management has not disclosed it in financial statements, then obviously it is a misstatement. Okay. Now, Hiral, what do you want me to explain? A and B. Either you want to explain me this thing. So you are asking me to explain. Here it is written that the auditor has the company has disclosed all the related party relationships and transactions which are required by FRF. Now the auditor has to consider in totality. The auditor has to consider in totality what is the effect of these related party transactions on the, say, state of affairs or profits or losses. Okay, so it means to state that whether after considering the effect of related party transactions, the financial statements still give a true and fair view. They still give a true and fair presentation, and whether they are not misleading, whether they are omitting some information which can lead to misleading of the users of financial statements. So the company has disclosed all the related party transactions in accordance with FRF. Now the auditor has also verified these transactions. So here to if he finds some material misstatement, then obviously he would be seeing its effect finally on his opinion, that whether it would lead to change in his opinion, because if he finds some information to be misleading, then obviously it is a misstatement, then he would have to modify his opinion. He would see that if that misstatement which this disclosure has caused, whether still he can give a true and fair view of the state of affairs of the concern, whether he can opine in such a way, or whether he has to modify his opinion. This is all this para is all about. Hiral, is it clear to you? Yes, Pooja, you are asking about frauds. Now you are saying if fraud is detected and management asks the auditor, threaten the auditor, then it is a threat to his independence. It is an intimidation threat. So the auditor has to perform his work independently. He would report objectively in the light of circumstances, in the light of the situation. And you would also read that in case of a company, in further chapters, in chapter 5, you would be reading that in case of a company, if the auditor has a reason to believe that a fraud has occurred in the company, or fraud is being committed in the company of rupees 1 crore or more, then he has to report the matter to the central government. First, he would communicate the matter with the board, or the whatever procedure is laid down, and after receiving reply from the board, or as per prescribed norms, he would report the matter to the central government. So it is not the way that you are thinking the system works. Yeah, now Hitesh, you are asking, can auditor only check those aspects of related party where he has some doubts, or he has to check all the transaction? Hitesh, these are all matters of professional judgment. This is for the auditor to decide. This is for the auditor to decide, depending upon the circumstances, depending upon the situation, that if there is a risk of material misstatement, obviously he would be applying his audit procedures in that way, or he may want that he wants to check all related party transactions, or if he makes a sample checking and and if he has found nothing wrong, then he may work accordingly. Now we come to the identity of related parties. The identity of related parties. So students, here we have already discussed that if FRF says what are the related parties, then information would already be available in the financial statements. Then auditor need not be worried about, because say Companies Act 2013 defines related parties. So all the balance sheets, all the financial statements of a company prepared in accordance with the Companies Act 2013, definitely these would be disclosing all the information relating to related parties. Okay. So this information would be readily available to the management, because entities information systems would record, process, and summarize all the transactions to maintain the disclosure requirements of the framework. Okay. So management would be having all the list of related parties. It would be having a list of all the related parties. However, there might be some cases where FRF does not define, related parties. Okay, then in such a case, we have already discussed, management might not be aware of all the related parties. So then auditor would have to dig out what are the related parties, from whom, whether there is some concern, whether there is a company who is influencing the decisions of the reporting company. Okay, then he would have to himself dig out the information regarding related parties. So from where he is going to dig out this information, guys? How? Say if the management has not disclosed related parties because the FRF, in accordance with which the financial statements have been prepared, does not require to disclose such information, then how the auditor can dig out? Say students, he can dig out such information from variety of sources, like say income tax returns. Say if he has some doubts, then he can ask the management to give income tax return of this company. Okay, and it contains all details of who are the shareholders, who are the directors, these kind of things. He can check from the information given to regulatory authorities, say to certain government authorities. Say in case of a firm, students, let us take a very practical small example. Say in case of a partnership firm who is required to get its accounts audited under income tax law. So the income tax law requires the auditor to disclose transactions done with related parties under section, you might have read, guys, in your income tax law 48(2)(b). Okay, now these are all transactions done with related parties. The auditor has to only disclose the particulars of payments made to related parties. Okay, so these kind of things he would have to see from where he can dig out such information, like who are the owners of the company, what type of investments the company is making, what is the structure of the company, whether what is the structure of that organization, and how it is financed, whether it is taken loans from whether it is more debt oriented company or equity one. Okay, so these type of things. Now this is another, how can auditor verify the existence of related party relationships? Now I have already told you, some examples are given. Income tax returns, information supplied by entity to regulatory authorities. Say even in case of a company, if the auditor finds that all the related parties, auditor has a doubt that all the related parties have not been disclosed, then he might ask for shareholders register to know who are the main shareholders. Okay, the auditor has a doubt that say Companies Act 2013 has requires these to be related parties, but the company has not fully disclosed all those related parties. So he can dig out the information from these documents. Okay, records of entities' investments, or say contracts and agreements with key management. Say directors might be entering into directors of the reporting company might be entering into contracts or agreements with other companies in which their relatives are director. So the auditor can call for those agreements and understand whether there exists some relationship between these two companies. Okay, internal auditors reports. So the internal audit report might throw a light on the related party transactions. So these are the some of the examples. So guys, is that clear to you? Related party transactions. So we are done with students essay 550 pertaining to related parties manner. So at this stage, we are going to take a short break of 10 minutes, guys. So see you after 10 minutes. Welcome back, students. So now we shall be starting another topic, that is written representations. Now there is a separate essay 580 in respect of written representations. Now, students, first of all, we have to understand what is the meaning of written representations. Guys, very simple. Written representation is just a written statement by the management. What it is a written statement. As the name suggests, written representation, it is a written statement by the management to confirm certain matters or to support other audit evidence. Say the auditor wants to confirm certain matters from the management. So it would ask the management to give a written representation. So the management in writing by means of a letter to the auditor, it confirms those matters. So this is what we mean by written representations. Or there might be a situation where some evidence is available with the auditor, but the auditor wants to take a written representation from the management. He wants this matter to be confirmed from the management. So it would provide him, it would support his audit evidence. Like students, you would remember just now, before the break, we had learned that as per SA 501, the auditor shall obtain a written representation from the management regarding what? Regarding all the litigations and claims involving the entity. Because such a this is a such kind of matter that auditor feels that it is necessary for the management to confirm it, because due to the situation, he might not be in a position, the auditor might not be in a position to state that all the litigations or claims involving the entity have come to his knowledge and their effect has been properly disclosed in the financial statements. So he wants to take a representation, he wants to take a written representation from the management confirming this aspect. So guys, you understand what a written representation is all about? Written representation is nothing but it is a sort of letter. It is a representation given by the management. It is given by the management. To whom it is given? It is given to the auditor. Okay, to confirm certain matters or to support other audit evidence. So what is SA 580 all about? It concerns about the auditor's responsibilities regarding obtaining written representations from management or from those charged with governance wherever necessary. Okay, so what is SA 580 all about? SA 580 is about the auditor's responsibilities to obtain written representations from management and from those charged with governance wherever appropriate. So guys, here you have understood. Now we have done many essays, like we have done SA 580, we are doing it. We have recently done SA 501. We have also today done SA 550 relating to related party relationships. Now you would be understanding that all essays, all standards on auditing deal with auditors' responsibilities. These deal with auditors' responsibility regarding different aspects. Like SA 550 deals with auditors' responsibilities regarding related party transaction and relationships. And this very SA 580, this is dealing with auditors' responsibilities regarding what? Regarding auditor's duty to obtain written representations from management. And SA 501, it was dealing with auditors' responsibilities in regard to obtaining audit evidence in respect of selected items like nature, like existence and condition of inventories. Okay, regarding litigation and claims involving involving the entity, regarding segment information. Okay, and one more important thing, students, you have to understand that written representations do not include financial statements or assertions contained in financial statements or books and records. These are separate from all these things. Written representations are separate from financial statements or books and records. Say, many of you may assume that financial statements are also a sort of written representation. No, financial statements are not written representations. Written representations are separate from financial statements and accompanying books of accounts or records. These are just letters given by the management, confirmations given by the management to whom? To the auditor in respect of certain matters or to support some other audit evidence. Okay, so written representations in this context do not include financial statement, assertions therein, or supporting books and records. Important, because it is a distinctive point. It makes things clear. Okay, so written representations. What are written representations? Written representation as per SA 580 are written statement by whom? By management, provided to the auditor to confirm matters, certain matters, or to support other audit evidence. So this is the proper definition of the written representation as per SA 580. Now students, you have also to understand that although written representations are a audit evidence, but these do not provide sufficient appropriate audit evidence. These are not, although written representations provide necessary audit evidence, they do not provide sufficient appropriate audit evidence about any of the matter with which they deal. Say in case of our example of litigations and claims involving the entity, the auditor has to make inquiries. The auditor has to make inquiries and obtain the audit evidence. The auditor has to make inquiries with the in-house legal counsel. He has also to review the correspondence with external lawyer. Okay, and he has to seek information. He has to carry out a review of legal expenses account. But he cannot be merely satisfied with by obtaining a written representation from the management that all the litigation and claims involving the entity have been disclosed. Although he would obtain such kind of written representation, but it only supports whatever evidence he has collected. Okay, so this is also important point. It is a distinctive point that written representations are audit evidence, are a form of audit evidence, but these by themselves do not provide sufficient appropriate audit evidence. These only support other audit evidence. Okay, like these are in the role of, you can say, in movies there are supporting actors, there are supporting actresses. So similarly, in case of taking the same analogy forward, these perform the same role. These perform supporting roles. Okay. So like guys, there is a example given here. Say the auditor of the company wants a company to give evidence regarding some FDs, fixed deposits they are having with the banks. So instead, the management gives them written representations that we are having so much FDs with XYZ bank. So would it be a sufficient appropriate audit evidence, guys? Would it be a sufficient appropriate audit evidence? No, it would not be a sufficient appropriate audit evidence. The company would have to give a certificate from the bankers confirming the value of FDs in the name of the company. So that would constitute a sufficient appropriate audit evidence. This written representation is a sort of confirmation. It supports that evidence. Is that clear? So the objective of auditor regarding written representation. So what is the objective of auditor regarding written representation? Objective is what? To obtain written representation from whom? From management, to support other evidence and to respond appropriately. Say if in case of some matter the auditor wants written representation but the management has not given that, so the auditor has to respond it, okay, appropriately with the management. Now management from whom written representation requested. Now obviously the written representation, students, written representations are requested from the management, from the key management persons, okay, who are responsible for preparation of financial statements, who are in the know-how of the matters, okay, of the matters, of the significant matters which are required by the auditor. So such person may be chief executive officer of the company, chief financial officer, okay. However, such representations can also be obtained from the persons who are from those charged with the governance, who are having specialized knowledge about these things, because they are dealing with these things. Like say the auditor might be obtaining written representation from certain engineers of the company, from staff engineers who may have the knowledge about certain machinery or certain, say, environment liability measurements, okay, that might be relevant to the users of financial statements, or which might have to be disclosed in accordance with the applicable financial reporting framework, in accordance with law. So the auditor wants to check whether the information disclosed is correct or not. So he may rely upon the written representation from the engineer to tell him about this thing, to confirm this matter. Similarly, he may obtain written representation from an actuary responsible for actuarially determining accounting measurements. Now you would be saying, before I receive your mails, who is an actuary? So I would explain who is an actuary. So actuary, students, you can understand that actuary is a person who undertakes risk assessment. So this term is more usually used in the insurance industry, in life insurance industry, or in the non-life insurance industry. Say we assume that in certain area an earthquake has come, and due to this there are huge number of losses in say certain region. So what the actuary would be doing? So he would be pricing future premiums. He would be pricing future premiums. So he would be assessing the risk that if the earthquake comes, going by the current claim experience of the company, he would be assessing the risk. He would be assessing the future risk, and that kind of risk that would be inbuilt in the pricing of the product. That would be inbuilt in the pricing of that product. So these are kind of functions which are performed by an actuary. Okay. So internal counsel, obviously some internal lawyer of the company who may provide information essential to provision for legal claims. So therefore we understand that written representations are not only obtained from the management but also from those charged with governance, the persons who might be having specialized knowledge about these things, like in case of actuary or engineer or some lawyer employee of the company. Okay, clear guys? So written representation about management's responsibilities. So the auditor students always obtains written representation about the management responsibilities. He always obtains a written representation from the management stating that preparation of financial statements is the responsibility of management in accordance with the applicable financial reporting framework. Although this point is there in audit engagement, when the auditor is engaged, it is there in the letter that management understand its responsibility, but the auditor has to obtain a specific written representation that management is fully aware of this thing, that it is his responsibility, it is its responsibility to prepare financial statements in accordance with applicable financial reporting framework, and the management has discharged its responsibility. Okay. The auditor shall also request management and provide a written representation to the effect that all the information has been provided to the auditor and all transactions have been recorded. So obviously this is the minimum thing the auditor would be wanting to confirm from the management. Okay, that you have given me all the information because my opinion is based upon the information which you have given, and you have recorded all the transactions, and these are recorded in the financial statements. These are general matters, but a written representation is obtained. Okay. Description of management's responsibilities. So management responsibilities shall be described in the written representation, as we have discussed. So wherever essays, wherever centers on auditing require auditor to obtain written representation, the auditor shall be obtaining the same, as we have discussed in case of SA 501. Okay, involving litigations and claims involving the entity, or it may be necessary for him to support other audit evidence relevant to financial statements. Clear guys? So it is a fairly simple thing, and guys, you have to understand that date and period covered by written representation is very important. That say the auditor signs his report on say 7 July 2022. Then written representation cannot be after the date. It cannot be after the date of 7th. It cannot be 8th, or it cannot be 15th. However, it can be 4th July, or it may be earlier than that, 30th June. So it should be as near to the date of the audit report as is practicable. Why it is so? Because say if the auditor has given his report dated 7 July, then written representation cannot be of a later date, because the auditor has already given his opinion. So obviously, logically, the written representation has to be of a date earlier than the date of audit report, not later, not after, and it shall be as near as practicable. It shall be as near as practicable to the date of auditor's report, because if it is as near to the date of auditor's report, it means that auditor has considered all matters which have arisen between the date of financial statements, between the cutoff date, and also between the date of auditor's report. During this intervening period, also those matters have been considered. Okay. So furthermore, because the auditor is concerned with events occurring up to the date of auditor's report that may require disclosure in financial statements, the written representations are dated as near as practicable, but not after the date of auditor's report. So this is the logic behind it. So this is the logic behind it, that why written representations should be as near as practicable to the date of the audit report. Okay, is it clear, students? And one more thing, that when auditor obtains written representations, then he assumes that management has agreed on its responsibilities. Okay. However, the auditor may ask management to reconfirm its responsibilities, say if he thinks that management has misunderstood some terms of engagement. Okay. So the audit engagement was prepared in some 2-3 years back, and the same audit engagement is continuing, and some terms have changed and circumstances have changed. Okay, and the auditor thinks that management misunderstands those responsibilities. Okay, or those who have signed the terms of audit engagement, they are no longer have that responsibilities. They might have left the organization, they might have left the company. So in that case, it would be better for the auditor to get reconfirmed from the management acknowledgement of its responsibilities. Okay, guys. So students, would you like to see how a written representation look like? So we will see how a written representation look like. Now, yes. Now this is a representation letter, a performa of written representation. Okay. So it is given by whom? It is given by the company, by the organization, on the entity's letterhead, on the company letterhead. Okay. So it contains a date, and it is addressed to whom? It is addressed to auditor. Obviously, representation letter is given to written representation is given to auditor, so it is addressed to auditor. So what does it state? It states that we confirm to the best of our knowledge and belief and inquiries. The management is also saying, the management is also qualifying it, that to best of our knowledge and belief, we confirm the following things. What are these things? That we have fulfilled our responsibilities as set out in the audit engagement for preparation of financial statements, and significant assumptions used by us in making accounting estimates are reasonable. Related party relationship and transactions have been appropriately accounted for and disclosed in accordance with applicable accounting standards in India, and as per SA, whatever it is required. This is also requirement of SA 550. Okay, now I am enlarging the screen. So now you are able to see the screen, guys. All the events subsequent to the date of financial statements have been adjusted or disclosed. So all the things which we have discussed, the effect of any uncorrected misstatements are immaterial. So these things. And the management is also confirming these things. Management is also confirming these things. What are these things? That we have provided you all the information of which we were aware for presentation of financial statements. That management is confirming that we have provided you all information you have asked for. We have given unrestricted access to all the persons. You wanted to meet with that person, you wanted to seek inquiry from that person, we have given you that access. We have also provided all additional information to you which you have requested for the purpose of audit. Okay, and further, all the transactions have been recorded in the accounting records and are reflected in the financial statements. We have also disclosed to you the results of our assessment of risk. That management has also carried out its own risk assessment of fraud. Okay, so these type of things. So is this clear to you guys? So now you have got a fair idea of what a written representation is all about. It is an illustrative written representation. So written representation can be about any matter. It can be about any matter. Certain matters we have discussed, which is there, which should be there in the written representation, that it is a responsibility of management to prepare financial statements. The management acknowledges it, that all the transactions which should have been recorded have been recorded, and these are appearing in the financial statements. So understand key points, that written representation is given by the management to whom? To auditor. Okay, to do what? To confirm certain matters or to support some audit evidence. So these by do not itself constitute sufficient appropriate audit evidence. Although these are audit evidence, but these are themselves not sufficient appropriate audit evidence. These can support, these can supplement some other audit evidence. Obviously, date should be there because date is very important. Written representations cannot be after the date of audit report. That is a must. That is basic logical thing. That if how can a company give a written representation which is on a date which is after the date of audit report, because the auditor has already expressed his opinion. I have explained it to you. Okay. So these are kind of written representations. So you understand that written representations are nothing. These are just a confirmations from management in a letter form. These are necessarily written. These are given by the management to the auditor to confirm certain matters or to provide support to some audit evidence. And another important point, that written representation by virtue of SA 580, these do not include, guys, these do not include financial statements, assertions therein which are implied or explicit from those financial statements, and books and records. These are separate representations, separate letters. Okay. Okay, guys. So we have done today, students, remaining part of SA 501. We have also done 550 related party relationships. We have also done 580, that is written representations. So now we shall be doing certain correct, incorrect type of questions. So guys, be ready with correct, incorrect type of questions. Students, are you ready? So guys, be ready. Do write question number when you are sending your answers. Question number 1. The date of written representation may be after the date of auditor's report depending upon circumstances. Now tell me, send your mail with lightning speed. Question number 1. We have just done it. The date of written representation may be after the date of auditor's report depending upon circumstances. Yes, Hiral, the point we have left out that I will be covering right now after this correct incorrect questions. The date of written representation may be after the date of auditor's report. Yes, 4 mails only, students. Only 4 people are logged in, guys. Am I teaching you so bad? Yes, students. Am I teaching you so bad that all of you have left? Please tell me. Yes, only 7, 8 mails. Ayush, Tesh, Janvi. Yes, all of you have answered correctly. These cannot be after the date. These have to be the before the date of auditor's report. These have to be before date of auditor's report. So this statement is incorrect. Okay. So this is incorrect. Now question number 2. Financial statements including assertions therein are a kind of written representations by management in accordance with SA 580. Yes, tell. Question number 2. Whether the statement is correct or incorrect. Financial statements including assertions therein are a kind of written representations by management in accordance with SA 580. Few mails only, 3, 4 mails. Financial statements including assertions therein are a kind of written representations. Whether financial statement themselves and assertions therein are a kind of written representations by management. Now it is this statement, as we have just learned, it is incorrect. Hitesh Jain, how you are writing it is correct? It is not in accordance with SA. What does SA 580 state? SA 580 states that written representation in this context do not include financial statement, assertions, or books and records. This I have already told you, and this is also there in your module. How you are writing it correct? Now you are saying it incorrect. Now third. Now this it is mandatory for an auditor to meet external legal counsel of the company to assess risk of material misstatement in accordance with SA 501. Yes, guys, whether it is compulsory for the auditor to meet external lawyer, external legal counsel to assess risk of material misstatement. It is mandatory, whether it is compulsory. If he doesn't meet him, then he cannot give his report. Is it so? If it is compulsory to meet him, if it is whether it is compulsory to meet him, that because if he doesn't meet, then he will not be able to assess risk of material misstatement. If it is true, if it is correct or incorrect. Yes, guys, few males, but not all. Is it mandatory for an auditor to meet external legal counsel of the company to assess risk of material misstatement in accordance with SA 501? Is it so? Yes, students, tell me, is it so? Yes, it is also incorrect. So, Danshu, you are writing conclusion. Your conclusion is right, but you are giving wrong reason. You say if the internal lawyer does not give information, then he can go to external lawyer. No, it depends upon circumstances. It depends upon his judgment. If he thinks that it is necessary to meet the external lawyer because there is the matter is so complex, or there is some difference of opinion between the management or the external lawyer, then he would require that he would ask the management to arrange a meeting with the external lawyer. It is not necessary. It has nothing to do with the internal lawyer. Hope you understand the logic. Hope you understand the logic. Sudhanshu Pandey, is it clear to you? Yes, Amrit Palkor, you are writing it correctly. If he identifies significant risk or any of the matter we have discussed, like there is a difference of opinion, or there is some complex matter of, if there is significant risk. Yes, Amrit Palkor, your answer is right. So guys, it is only when you would be writing correct answer, you would be getting full marks in the exam. 2 out of 2. If your conclusion is correct and reason is correct. But if your reason is not correct, then you would be getting 0. Students, remember this point. Now, question number 4. Now, this is slightly practical question, guys. So, anyways, you can make a reasoned guess. So, knowledge about related parties can be obtained from monthly GSTR 3B and annual income tax return. Now, tell me whether this is correct or incorrect. Read the question carefully, students. Read the question carefully. Read the question carefully between the lines. Whether you know, students, what is GSTR 3B? Is the GST you are studying, guys? GST is in your syllabus? Or should I explain to you? Is GST law in your syllabus, students? In any of the subjects, is GST law in your syllabus at intermediate level, students? Say GST or 3B income tax return, you know? Income tax return is yes, Deepak Kumar, you are saying my inter exam is in May 23. So you can attend the class. Although these are from November 22, but it is highly unlikely. Yes, many of you are saying that GST is in our syllabus, but we have not studied yet. Now, guys, this is the concept of interdisciplinary study, that you have to, when you will study the whole thing, then you can make interrelationships. Now, income tax return, you know that every company, every organization, they are most likely to file their annual tax returns, annual income tax returns showing profit. They have to pay tax on that. So GST, in GST, I shall tell you there are two returns. One is GSTR 3B and one is GSTR 1. Now GSTR 1 is a sales return. It is only a sales return. So whatever sales the company has made, so it has to feed all the invoices in the sale return. That this is the GST number of the party, this is the amount of the sale, this is the quantity, this is the taxable value, this is the invoice value. These are the things. So GSTR 1 is the sales return. It summarizes the sales transaction, and it gives details of every transaction with the name of the party, with its GST number. Whereas GSTR 3B, it only gives a consolidated figure, and it shows what finally the output tax the company has to pay. Say the company has charged during the month a GST of 1 lakh rupees on all its bills, and it has also purchased something, and its input tax credit is 50,000. So ultimately it has to pay 1 lakh minus 50,000, 50,000 to the government account. Now GSTR 3B does not show any name of any individual party or things like that. It only shows cumulative figures of the sales and its output tax and the input tax credit which is available to it. Okay, so we shall not be able to identify related parties from GSTR 3B. So this statement is incorrect. Although we can identify related parties from annual income tax return, but no information can be made from GSTR 3B. So students, it was slightly practical question. So anyways, by this way, your knowledge has also got increased. Okay. So Ayush, you are saying in income tax returns, we have to disclose various sources of income. How information can be about related parties can be known? No, Ankush. Sorry, Ayush. In income tax return, also, say in the case of companies, there is separate disclosure requiring transactions with the related parties. Say in case of the company, it separately asks information like loans advances from related parties. Okay, so these kind of things are there. Income tax return today, these days, is a very comprehensive and bulky form running into many pages. Although it is online, but it gives whole lot of information. It contains shareholders details, who are the significant owners, who are the significant beneficial owners. It contains details about the directors of the companies. Okay. So is that clear to you? So this statement is also incorrect. Although we can get information regarding related parties from income tax returns, but from GST or 3B it is not possible. Okay. So transactions with related parties are always fraudulent in nature. Is this statement correct or incorrect? Question number 5. Transactions with related parties are always fraudulent in nature. Is this correct or incorrect, guys? Yes, quickly. Transactions with related parties are always fraudulent in nature. As per SA 550, it states, the statement says that SA 550 states that transactions with related parties are always fraudulent in nature. Yes, only 3 males: Amrit Pal Kaur, Akash Neel, Ayush Agrawal. What about other students? Have you slept? So while reading what you call as theory subjects, many students sleep. So this should not be the case. So you would understand, guys, theory subjects are in fact practical in nature. So transactions with related parties are always fraudulent in nature. This is also incorrect. It depends upon the circumstances. Okay, these are not always incorrect. Fraudulent. These are not always fraudulent. They might be genuine transactions also. So we shall also do another lot of questions quickly. Yes. First, question number 1. The auditor may determine that performing substantive analytical procedures will be sufficient to reduce audit risk to an acceptably low level. Yes, guys, question number 1. The auditor may determine that performing substantive analytical procedures would be sufficient to reduce audit risk to an acceptably low level. Is the statement correct or incorrect? Now read the statement carefully, guys. Read the statement carefully and try to recall what we had studied day before yesterday. Try to recall what we had studied day before yesterday. Question number 1. The auditor may determine that performing substantive analytical procedures will be sufficient to reduce audit risks to an acceptably low level. Yes, 2 males only, Pooja and Hitesh. Pooja answer is without reason. So Pooja, how credit would be given to you in exams? The auditor may determine that performing substantive analytical procedures will be sufficient. Read the words carefully. Now students, this I would like you to read it again. This statement is correct, but many of you are saying it is incorrect because the things have not been absorbed in your mind yet. So you need to read it from your module again. So we had students, we had learned that substantive procedures consist of two things: substantive analytical procedures and tests of details. Okay, so the auditor may choose to may determine that analytical procedures are need of the hour, he is gaining the satisfaction, or he may depend upon the test of detail, or he may choose a combination of the two. So guys, you have to remember that you have to distinguish it from the tests of control and substantive procedures. So you are confusing these two things. Tests of control and substantive procedures, these have definitely to be performed, because tests of controls are also necessary, substantive procedures are also necessary. But within the substantive procedures, the auditor may determine that he would gain satisfaction by performing substantive analytical procedure and his audit risk would be low, or he may determine that he would perform only test of detail, or he may determine that a combination of two is required. Okay, so is that clear? Is that clear to you guys? The nature of assertion number 2. The nature of assertion is relevant to the design of test of details. Now, when the auditor is designing tests of details, whether the assertion he is trying to check, which is the assertion, whether it is existence, whether it is occurrence, whether it is completeness, whether it is relevant. The assertion he is trying to check whether its nature is relevant to the designing of test of details. Question number 2. Yes, question number 2. No answers. Pooja, again you are writing but without any reason. Pooja, you are again writing but without any reason. What about others, guys? The nature of assertion is relevant to the design of test of details. Yes, few answers. Akash Keel. Sudhanshu Pandey, without reason. Yes, this assertion is also correct. क्या कौन सी assertion आप चेक कर रहे हैं? Whether it is completeness or occurrence. Obviously, you would design your test of details in that way. If you are checking existence, if you are checking occurrence assertion in respect of a transaction, then you would be designing your tests of detail in different way. You would be designing your audit procedures in different way. If you are checking completeness assertion, then you would be twisting it in some another way of selecting some other item so that assertion made by the management is tested, so that you can test it. Question number 3. As per SA 505, positive confirmation request means that confirming party agrees with the information sent by auditor. Question number 3. As per SA 505, positive confirmation request, it is just asking about the definition, meaning of positive confirmation request. Now, what does positive confirmation request mean as per SA 505? Yes, guys, question number 3. As per SA 505, positive confirmation request means that confirming party agrees with the information sent by the auditor. Only 2 males, Ayush and Pooja. Pooja this time with reason. I think my word has some effect on you. Isn't it, Pooja? What about others? Now this statement is Incorrect. Why? Now, Pooja, Ayush, all of you are writing reasons, correct reasons. Sudhanshu Pandey, Nikita Gupta. Positive confirmation request means that confirming party agrees or disagrees. If the request is such, it is designed in such way that confirming party agrees or disagrees, he has to respond to that request, then it is a positive confirmation request. Okay. So now number 4, as per SA 505, external confirmation procedures also include follow-up requests to the confirming party. Is the statement correct or incorrect? Question number 4, yes. As per SA 505, external confirmation procedures also include follow-up requests. Whether external confirmation procedure includes follow-up request, the question asks you to state whether it is correct or incorrect. Only 3 males, Amrit Palkor, Janvi, Ayush, Jaya Agarwal, then Jaya again without reason. This statement is correct. Yes, many of you have answered correctly. The follow-up request is a essential part of external confirmation request. It is correct. Question number 5. As per SA 501, the auditor shall obtain sufficient appropriate audit evidence regarding existence, condition and valuation of inventory. Question number 5, yes. As per SA 501, the auditor shall obtain sufficient appropriate audit evidence regarding existence, valuation, existence, condition and valuation of inventory. Yes. As per SA 501, the auditor obtains sufficient appropriate audit evidence regarding what? Existence, condition and valuation. Now students, I am always telling you to read the statements carefully. First give me answer of this question. Question 5. Only 3 males have come, Pooja, Ayush and Janvi. What about others? The auditor shall obtain sufficient appropriate evidence regarding existence. Yes, now guys, many of you, Pooja, Ayush, you are writing it is a correct statement. How, Pooja, how, Ayush, how it is correct? We had learned that as per SA 501, the auditor has to obtain sufficient appropriate evidence regarding 2 things, existence and condition. How, whether valuation was there in SA 501? Have we read anything about valuation in SA 501? No, because SA 501 deals with auditor's responsibility regarding existence, whether the inventory exists and what is the condition of it. That is why he attends physical verification. It does not say anything about valuation. Valuation is separately dealt by accounting standards. That auditor has to see whether the inventories have been valued properly or not. But as per SA 501, as far as SA 501 is concerned, he does not. There are no responsibilities regarding valuation of inventories as per SA 501. So guys, these are, yes, Hiral, you are also answering. I am getting your mails. You have answered it correctly. Hiral, you have answered it correctly that this statement is incorrect. It is not about valuation. You have written because it is not about valuation. That is the right answer. It is. So what answer you have to write in the paper? You have to write that SA 501 deals with auditor's responsibilities regarding existence and condition of inventories. It is not concerned with valuation of inventories. Okay, so that is the proper answer. So this statement is incorrect. So guys, that I have told you, this word existence condition, I have repeated how many times? A day before yesterday, also I had repeated it, I think 10 times. Today I have also repeated it 5 times. But still, guys, you are making mistakes. That is why I have told you that you have to absorb the matter. You have to understand the key points. Otherwise, exams में भाई लोगों, you would be getting no credit. You would be getting no credit. Okay, guys. So now, students, are you understanding how deep you have to study? So the questions in the module, these would be asked from in a very detailed manner, which are hidden. You have to read it once, twice, remember it, and then form a picture in your mind, then form an opinion, and remember all the distinctive points, whether it was there or not. Say when you are reading about accounts, valuation would be there, but you have to uh, keep a separate compartment for auditing, and you would have to remember that in SA 501 existence and condition was there. Okay, is that clear to you guys? So we will come to one subtopic which we left regarding management representation. One small point, we shall be covering it quickly. So if guys, if there is doubt about reliability of written representation, say the management has given written representation, but the auditor has doubt about it. Why it has got some doubt? Say that written representation might be in conflict with other audit evidence. It might be in conflict with other audit evidence which the auditor has obtained. Say like in case of litigation and claims involving with the entity, the management has given a written representation that it has disclosed all the litigation and claims. But by performing inquiries with the internal lawyer or external lawyer, the auditor has come to know that there are certain cases, certain litigation cases which have not been disclosed in the financial statements. So there is a contradictory evidence. There is an inconsistent audit evidence. So the auditor shall perform audit procedures to resolve the matter. So he will check whose version is correct. Either it may be so that he has misunderstood the matter from the lawyer, the management is correct. Okay, he may want to reconfirm the matter from the management by giving reference to his inquiry from the external lawyer or internal lawyer. Okay, so if the matter still remains unresolved, okay, so the auditors shall determine what effect does it have. What does it have? What effect does it have? And suppose if its effect is such that it is going to affect the auditor's opinion, then obviously he will determine what is effect of this on his opinion, and he may have to modify his opinion. Okay. No, Hiral Parekh, WR you are saying is in oral form. WR is never in oral form because its name is written representation. Inquiry can be orally. Inquiry can be in oral form, but written representation is always written. It is always in written form. Similarly, say in certain matters, the auditor has requested written representation and the management has not provided. Then what the auditor has to do? He would discuss the matter and he would find out what is the explanation of the management, whether it is reasonable or not, or he may, if the management is not giving certain basic written representation, then the auditor may have to rethink about the ethical values and competence of the management. That management is not in a position to confirm some basic matters, it is not even acknowledging something on its letterhead, then what effect it can have on the whole audit process, on the audit evidence in general. And if he thinks that management is deliberately hiding or intentionally not giving some written representations which they ought to give, and there is no justification behind it, then he will evaluate the whole thing, its effect on audit evidence, and finally its effect on opinion. Now, Hiral, you are asking WR in oral or written? Where it is written, I do not find. Written representations are written. Where it is written that these are oral? At which page it is there? Bring it to my knowledge. Yes, yes, Hiral. About essay 705, Ayush, you would be reading about later in when your second module starts. It is relating to the opinion of auditor. Yes, Hiral, I am waiting. So guys, today we have done many important things. Essay 501 we have completed, and essay 550 related party transactions, very important topic. Essay 580 also very important topic, written regarding written representations. So we have done fairly important topics in this chapter related to essays. So one query I'll take first of Ayush. He is saying this is written in page number 3.44 at where you are saying? Page 3.44, para 3 and 4. Now here it is saying, here it is talking about general representations of the management. So here it is saying that if the matter remains unresolved, then whatever representation the management is making, whether the information which has been given by the management orally to the auditor, or whether the management has in fact given written representations, then he would have to evaluate the whole of his process, whole of the process through which he has obtained the audit evidence. Okay. So Ayush, you are yourself writing now what I told you. So both of our opinions reconcile. So that should be the correct interpretation, isn't it, Ayush? Yes, isn't it, Ayush? Now you are saying page 3.14. Ayush, again, I think you are uh, learning about something else. So you have to understand, students, that written representations, as the name suggests, these are written, always written, and other forms of seeking information, other forms of obtaining representations like inquiry, seeking information, that can be oral. So that is why we say that audit evidence may also be oral or it may be written. Okay, so audit evidence may be oral because the auditor, when he seeks information, discusses some matter, inquires some information, that may not always be written. Okay, that may be oral. So is that clear to you guys? So that would be sufficient enough for today. Okay, guys, thank you. Very good night to all of you. Okay, thank you. Yes.